All right, welcome back. We finally reached our last lesson, last chapter in our mentorship, and we will be going through putting everything you learned together. So now, first thing we need to do when approaching step by step, we need to mark out our higher time frame, supply and demand, followed by price cycle on every time frame we approach. So without wasting any time, let's get right into today's chapter. This is just a reminder on price cycle before we proceed. Remember, we have a consolidation, we have expansion, we have retracement, and we have reversal, right? So now you need to know where are your supplies and where are your demands. You know, anything in the premium is what we call supply, and anything in a discount it's what we call demand, right? Right. What I do is start from the highest time frame. So my highest time frame is daily time frame, right? To see what direction the market is taking, to also see what the market is doing, right? So in this case right here, we can see that the market is printing highs and higher highs. So basically the market is moving to the upside, right? And now what I'm gonna focus on right here is this last bearish candlestick before that break of structure to the upside, right? So let me mark it out. Open of that candlestick to the week, right? To the week. So I'm gonna do that and also mark this as my break of structure. Remember, I said you mark your higher time frame, supply and demand first, right? So now we can classify that the market is printing highs and higher highs. So what we need to look at, our demand. We need to search for demand instead of supply. If the market was trending to the downside, we were gonna be looking for what? We were gonna be looking for our supply instead of demand, right? So right now I'm gonna mark this as my break of structure to the upside. So let me just say pause. Okay, pause. Full name of this is break of structure, right? Okay, so now as we can see guys, the reason why I don't mark this order block right here and say this will be my initial order block, it's because the market has done a double break of structure. What is double break of structure? We had a break of structure here, all right, and then we also had a break of structure here, and a break of structure here. The candlestick that was responsible for this one is this one, right? So we're gonna be looking forward for price to do this and go up. But if price does this, if price come here and close below that candlestick, we wait for the market to mitigate an order block that will be left behind up right about here, and then we target this order block down here, right? Easy. So let's see guys, let's see. So right now I'm gonna go all the way down to my 4-hour to show you how you can refine your order blocks, because you can't always be focusing on what on daily time frame. You only look at how the market is moving and you look at what the market movements. So right now I'm gonna go to my 4-hour. This is where I start my analysis guys. This is where I analyze. You see, this is where I analyze. As you can see, what I was saying, what I was talking about, this high guys was broken, and then the last candlestick was this one down here. That's how you refine your order block. That's how you refine your order block to get precise entries than to enter from daily time frame and so on. right? And we can see our last candlestick right here is this one. It's either you can include wicks or you can just do it with the open of the body, right? And then your to your close, right? And then as we can see right here, guys, we also had our 4-hour break of structure, right? But now I would say this is a change of character. It's a sign because now the market was still trending to the downside at this leg. So right here we had like a reaction of this order block and a reaction of this order block here. So now this will be our change of character on 4-hour. So what we're gonna be waiting for, we're gonna be waiting for the market to come all the way down here, right? You can still refine on M15. That's what I do. That's what I do, guys. That's what I do. That's what I always do, guys. That's what I always do. And then where is my last candlestick? Is down here. It's all the way down here. This one is when you want sniper entries. But then remember, guys, remember, because now if you want a sniper entry, I carry you refining. So now this is our what? Our change of character. Exactly like what? Like 4-hour, right? So now it gives us confidence to say what? To say this order block can be valid, right? Can be valid. But now once you chase sniper entries all the time, you must always know the spread of the broker you are using, right? You must also you must always know the spread of the broker you are using, so that you can't always be left out, right? So let's see how the market plays. I'll go back to 4-hour because we're done with refining and everything like that. Right? So now, as you can see, when we refine, it's on the wick of that 4-hour, right? 4-hour order block, we refined it. Look how small your stop loss will be, because your stop loss will be below. Give it like 5 pips or 10 pips below, right? You get my point. So let's see how the market plays out. Let's see how the market plays out. Okay, we had what? We had that level disrespected, right? The level was not respected. The order block just didn't work out, right? So this is where we do what? This is where we say this will be our change of character to the downside. This is our change of character to the downside. Right, guys, when you do this, you're gonna see all the time, you're gonna get the directions right, guys, whenever you do this. So now at this point, this is where most of you will get confused, guys, right? This is the last candlestick that broke to the downside. Why am I saying so? Because now this candlestick didn't leave us what? An imbalance in between. It balanced, right? And then the candlestick that has imbalance is this one, right? It's this one. But now you have to match it with the daily time, the daily candle. Yeah, as you can see on the daily time frame, you will be including all of this candlestick, right? The whole of the candlestick. But now we go back to 4-hour to do what? To refine, right? When we refine, guys, we just do this. Just do this. Let me check on 3-hour if we can find something. Exactly. Let's see. Okay, let's just, because now on 3 hours we have something in between there. Let me check 2 hours. Okay. 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 Let's go back to 4 hour and play it, guys, and let it play. Yeah, this will work. So now this one, guys, will be a risk entry, right? You will only on this type of order blocks, guys, this will give you a big stop loss, and when you lose a trade here, you're gonna be losing more, right? More capital from this one trade. So my advice is you wait for the market to tap here so that you can look for smaller time frame entries. Let's play it. As we can see, let's see, boom, you see it tapped and then it went down, right? What we do after the market taps here, let me replay it for here. Yeah, when it tapped, right? Let's play it up to when it tapped. Once the market tap on the order block that you marked, right, you go all the way down to 15 minutes. You no longer check what's this, and then once you see something like this, it's not that clear, we go to 5 minutes, and then on 5 minutes, this is what you do, guys. This is what you do on 5 minutes. Here is your change of character. Why am I saying it's a change of character? Because the market from this low was trending up, right? Was some sort of an uptrend right here, right? The market was trending up, it was printing highs and higher highs. So right here, this will be your change of character as it shifted in price, right? So let's just name it okay. Okay, sorry about that, guys. Yeah, let's just call it change of character. And then what we need to mark from that, I'll show you guys. Let me go back to 4 hours just so I can fix this order block right here. I can fix this block right here up to here. Yeah, then I go back to 5 minutes. Yeah, let's go back to 5 minutes, right? I'll show you guys right here. You're gonna get like sniper entries all the time, right? So now you mark your supply. This will be your supply then, right? This will be your supply. You mark it out because this is the last order block before the market did what? This is the last candlestick that was created before the market broke this low. So we mark it out. After marking it out, we wait for the market to come all the way up there, right? Let's see. Be patient, guys. You have to be patient with the market, all right? No matter how long it takes. No matter how long it takes, guys. No matter how long it takes. Let me pause and extend this rectangle tool right there. You wait no matter. And guys, remember, we have inducement right here. You can just say liquidity if you don't want to use the word inducement. Yeah, it's our liquidity point right there. My PC is lagging now. Oh my god. Okay. Yeah, it's our liquidity, guys. Here's our liquidity. Now we playing the patient game, right? You wait for the market to come tap you in, guys. The market will come back regardless, guys. Regardless. You wait, guys. You wait. Right, you wait. Okay, let me try and play yeah, and then let me try and go to 15 minutes and see if we flipped on 15 minutes. Okay, even on 15 minutes we just flipped, guys. We changed in a direction, as we can see here, and then here's our 15 minutes order block, guys. Here's our 15 minutes order block, right? Can just say it, but just to keep it clean, just to keep the chart clean, I like to use the one on 5 minutes. But bear in mind, on 5 minutes, guys, you won't always be tapped. But now we playing the patience game, guys. Playing the patience game. We waiting. Let's wait for the market to come back and tap us. Let's wait, guys. Let's wait. All right. Let me try and play it fast. As you can see, the market is promising, guys. Boom. Remember what I said, guys. The market won't always come all the way up to 5 minutes, guys. So now the market tapped what? The 15 minutes order block, right? The market tapped the 15 minutes order block. So on my entry, I was gonna be left out, but if you marked out the 15 minutes order block, you were gonna be tapped in, right? And then now we also changing in a direction right here, right? Also, so I'll just say break of structure. I'll just say POS. So I'll just show you guys how you can do this. Remember, your entry could have been here, right? Your entry could have been here with your stop loss above. Maybe give it like 5 pips or 3 pips away from the rectangle tool stop loss, right? Let me go to 4-hour. And also, guys, we're gonna flip on 4-hour too. As you can see, we flipped on 4-hour. For those who like to actually take risk-free trades or whatsoever, you wait for 4-hour to flip to, and then you mark your order block, your 4-hour order block, just like that, right? My PC is slow, guys. My PC is slow. Bear with me, guys. Bear with me. All right, so where is it? Yeah, just like that. Remember, guys, target base was that order block. I think it was on daily. Yeah, let's go to daily. I want to show you how simple you can utilize with this strategy, how simple you can make money from this strategy. Let's go to daily time frame. Remember, we had our breakout structure, right? We were targeting this order block which failed, and then now our target will be this one because we flipped, right? We flipped. Our target will be here. Let me zoom in. All right, why am I saying I'm gonna target there? Because we have imbalance right here. We have imbalance right there. Let me mark it out. Imbalance. We have imbalance right there, and also we have trendline liquidity inside, right? We have this trendline liquidity right here, which is resting liquidity, right? Resting liquidity. So what we do, we wait for what? We wait for that okay, boom, just like that. As you can see, guys, take profit hit. Let's go to 4 hours. As you can see, you could have capitalized 21% on this single trade, guys. Single trade. And remember, guys, what I said, consolidation, which the market was consolidating at this point, expansion led to a break of structure, retracement filled in imbalance and mitigated the order block, and now reversal phase. Reversal phase, I showed you on lower time frame how you can utilize, how you can approach it, and yes, just like that I showed you. And as you can see, guys, easy like that, we take profit easy like that. So now we also have like continuation entries, guys. If you see, if we see the market breaking, let me just do this. Guys. Okay, if we see the market breaking this low again, we do what? If we see the market breaking this order block again, we're doing the same thing that we did here, guys, right? Let's see. Boom. Okay, so now it's that simple. We broke to the downside. Here's our break of structure, which shows a sign of what? A continuation to the downside. So I'll just mark it break of structure, right? And then where will be our order block? Our order block, we zoom in, guys, we zoom in. What I'm gonna show you here is this, guys. We consolidated here, we expanded. You see, guys, the market, that's how the market moves, guys. Consolidation, expansion, retracement, reversal, and then here will be our break of structure to the downside, BOS, right? And then this is our order block here. For some reasons, guys, I wasn't gonna actually mark this order block, but what I saw this imbalance here, small imbalance day. So now after a break of structure to the downside here, we mark our last candlestick that was responsible for breaking structure. We mark it out, right? We mark it out. So right here, guys, for the purpose of the video, I don't want it to be that long, because I'm giving you a brief on how to do it, right? I don't want to confuse you. I want you to practice what I say you need to do, right? So you already know when the market tap here, because this order block is big. When the market taps here, you go on lower time frames, you look forward entry opportunities. Exactly. So Once we get this huge break of structure, guys, you don't actually execute right when the market taps here. You gotta be careful. You need to see liquidity engineered. Maybe here, same as here, guys. On the example I was doing here, we saw liquidity getting created on lower time frames, and then we found a sweep of liquidity, and then a reversal phase came in, right? Even here, you need to see that, as we can see, the market created a fake order block here, right? As we can see, the market keeps breaking structure to the downside, creating just to take them out. You see, the market took out liquidity here, we wait for the market to tap. You see, guys, this is inducement right here. This is liquidity, guys. This is liquidity. You wait for the market to tap. Okay, the market took out this liquidity. Still, some people would be saying, no, the market didn't tap my order block, so I'm executing because the market showed me a reversal. No, the market will come to our order block, guys. Be patient. You need to be patient. Boom, just like that. You see, the market tapped us in, and then here will be your what you call this, your confirmation on 4 hour. Here is the order block that was left behind, but it didn't break structure, so I won't consider this as our confirmation on 4 hour. What I'll do, I'll go on lower time frames to see how the market traded from this level to down here. And then at this point, guys, as we can see the market, how it's moving, it doesn't break this low. So I won't be targeting higher time frame supplies or demand, right? I won't be targeting higher time frame supplies. So what I was gonna do, guys, is this. Let's see how the market traded there. Let me not be quick to actually. Okay, let's zoom in. And then, guys, we also have this kind of order block. I'll show you now. It's a break of structure, but note something at the top here. We have something like a double top. If the market creates a double top and then break the low, you only mark what? The order block that is near the break of structure, right? The order block that is near the break of structure. This will be your entry point. Guys. Let me mark it out and do this, right? We had that 15 minutes break of structure to the downside. Also, this low was ran. Even this one, liquidity was taken out. So this will be your entry, guys. Here be your entry. Let me see. Boom. With your stop loss where? With your stop loss here at the top of what? Of that double top we're talking about. Let me go to 4 hour to set my target. So now on the target side, guys, remember I told you not to actually target higher time frame targets before seeing a sign on higher time frame, right? For example, if you executed on a 4 hour order block with lower time frame execution, but now the market is not showing you a sign on the 4 hour, you don't actually do what? You don't actually target higher time frame targets without you being sure. right? Because we're gonna be targeting what, this order block right here, until we see a sign of continuation to actually scale in, right? You could have you could have earned yourself 6% on this trade. And guys, I analyzed this chart right here. I analyzed it, and I even posted on my TikTok at Foresight Forex, and I also gave out the signal on this setup. But now people have to monitor it, because what I'm seeing now is that the market is not actually showing me a sign of going all the way down here to this order block right here. You see, we have an order block at demand here, which was my target, right? This was my target. So I'm no longer interested in targeting that, but we still have what? We still have this resting liquidity, guys. Remember, we still have this resting liquidity here. So if I see a 4-hour sign that, okay, we now exiting the upside, we pushing price even lower, I'm gonna do what's best, guys. I'm gonna scale in at this level right here, because I see an order block. After the market break structure of this order block, we have to see a retracement of this order block right here to right sells to the downside all the way down here, because we'll still have what? We still have this imbalance right here. We have imbalance right there, right? So let's see, let's play and see. Okay, this is current price, guys. This is current price. So the market didn't break this level right here. It just mitigated it and went back up. So I'm not sure. The market is actually consolidating at the moment. So let's wait for price to actually give us a push to the downside, to be comfortable in doing what? In executing on retracement. Remember, consolidation, expansion, retracement, and reversal. And I told you what each step mean, right? Consolidation, distribution of orders, expansion. Expansion is actually taking it's breaking of structures, right? Out of structures. Retracement is there to fill in what? The imbalance. And then reversal is seek to take out what? Liquidity. That's how simple it is, guys. Without complicating things, you can actually make money by just following a few steps. We only, for this strategy, guys, we only use four steps. That's what I've been using since I started trading Forex. You see, guys. So yes, guys, this is where I'm gonna end the video. This is where I'm gonna end the video. Oh, before I end the video, guys, we also have an order block here. I can see the market mitigated a demand, right? So hence I was saying I'm not comfortable in targeting this level before I see a change of character on higher time frame, on 4-hour, right? So that I can write sales up to this level. So yes, guys, this is the part of the video whereby I'm gonna end it. I'm gonna end this video. Thank you. Hope you put much time in practicing and practicing and practicing.